Hello everyone, and thank you for joining me for this second video. It's Today's video is on the balance sheet, which is basically an extension of the basic accounting equation: assets equals liabilities plus owner's equity. So in today's class, I will share with you the template that is used for the balance sheet, and we will do it in class or in video assignment together. I would have sent you previously in class or in video assignment, so you can follow along while I populate that balance sheet template, and you will see how easy it is to do that. Okay, so let me switch over to the balance sheet template so you can see and follow along as I go. All right, so again, the balance sheet template is an extension of the basic accounting equation. All right, here we go. And basically, this is what the template looks like. It's broken down into the heading, which says balance sheet. And over here, we would have the name of the company that the question would give to us. All right. So if the name of the business is Maria's Bakery, then we would put the name of the business on this line. And if they tell us that the date is at the end of December 2020, we would put as at. So the balance sheet always has that wording, as at a particular point in time. All right. And then of course, we will go through the balance sheet template in some detail. Again, that you would already have come across this terminology from the previous video, basic accounting equation. So the assets, of course, we have, remember, we spoke about two types of assets. We have the current assets and we have the fixed assets. So remember the difference between the two. Fixed assets are for more long-term use in the business. For example, office equipment, vehicle, furniture, land, building, those types of things. And your current assets would be those items or those assets that the business owns for a shorter period of time. For example, cash, debtors, all right, stock or inventory. Those would be examples of your current assets. And you can always go back to the previous video if you wanted to refresh your memory about the difference between the two or get some more examples. All right. So this section over here would be your assets, your assets section. Okay, and we have, when you add up all of those, you will get the figure for the total assets. Now it's supposed to automatically come up once you entered all the relevant information, depending on the question given to you. All right, so you don't have to fill out all the lines. All right, just what is given to you in the question, and we will go through an example in a short while. All right, now let's look at the second section, which says liabilities. Now again, remember that liabilities is broken down into two categories. We have current liabilities and long-term liabilities. Long-term liabilities would be for more what the business owes, for a longer period of time. Okay, for example, a mortgage that the business has, and current liabilities would be what the business owes that is due within 1 year. Okay, for more short term in nature. For example, if they have a short-term loan or if they owe suppliers money that is due within 1 year, that is another example, and that is also called accounts payable or creditors. All right, so there we have the figure for total liabilities when you add up these two. you will get the figure for total liabilities. Now remember, the difference between your total assets and your total liabilities would be your net assets, or also known as owner's equity. All right. So basically, what I'm telling you is that the net assets, so this figure over here, must always balance. Okay, that's why it's called a balance sheet. So your net assets must always be the same as your total equity. Otherwise, your balance sheet would not balance, and then there's no term to classify that. All right, you'll have to check over to see why the balance sheet didn't balance, and it must always balance. So that's how you know that you did the right thing and you put in the figures where they were supposed to be put in. Okay, so equity, your total equity must always equal to the difference between the assets and the liabilities. Now, your equity would be what the owner invested into the business. Okay, so let us say, for example, the owner invested $20,000. Okay, and there is a term here that I need to explain to you. It's called drawings. Drawings is basically what the owner takes out of the business for his personal use. So he invested 20,000 into the business. Well, let us assume that he took out $5,000 to pay for a personal item. For example, if he took it out to pay for a costume he needed to buy for Halloween. All right, so let's use, for example, 500 as the drawings, and we would have to put minus over there, right? Because he's taking it out of the business. Okay, and what else goes here would be what the business has in profit. Now, I know we did not speak about profit as yet. That will be in the next video. But let us assume that the profit for the period is 5,000. All right. So in this example, your total equity would be 20,000 minus 500 plus your 5,000 to give you a figure of 24,500. Now it means that your net assets must also be equal to that 24,500 in order for this balance sheet to balance. Okay, now the profit for the period is something that comes from your income statement, which we will discuss in the next class. But I wanted to introduce you to those concepts in this video so that you understand and get the hang of it a little bit early. All right, so let us now go to, if you can pull up the in-class assignment or the in-video assignment I sent to you, and it is the balance sheet for XYZ Limited as at December 31st, 2019. Okay, so again, the title of the company is XYZ Limited. That always goes on this line. So let us fill that out, XYZ Limited, and it's as at December 31st, 2019, so we can change the date. All right, so let us look at the balances that they have given us in the question, and our job is to prepare the balance sheet using the balances that they give to us. Okay, so we have cash as the first line item of $55,000. Now we need to go through each item and determine where in the balance sheet does it fit appropriately. Okay, so we need to figure out, is cash an asset or a liability? It's an asset, right? And is it a current asset or is it a fixed asset? So cash is a current asset, okay? It's for more short-term use in the business. So we can populate that amount over here of 55,000. Nice. And then we have accounts receivable. Now remember, another term for accounts receivable is debtors or people that owe the business money, all right? And would that be an asset or a liability? People owe the business money, so it would be an asset for the business, right? All right, and is it a current asset or a fixed asset? It is a current asset, so we can put accounts receivable in this section over here. And we put the figure of 25,000. Okay, then we have office supplies. Office supplies. Now, is office supplies an asset or a liability? Office supplies are things that the business owns, right, for the office, and it's more permanent in nature. So we can put office supplies under fixed assets. And that figure would be 1,500. Nice. All right. Then we have loans payable and accounts payable. Now, those words payable means that the business owes these things, right? They owe these things. So that's a liability for the business. So we can scroll down to the liability section and we can populate accounts payable under your current liability. So accounts payable is what the business owes to suppliers. They're also known as creditors. Okay, and we have a loan payable. Let us assume for this particular example that it is a short-term loan. Okay, so it's a short-term loan, which means it will fall under current liabilities. Okay, and that figure is 7,000. All right. So that is all the balances that they have given to us. And we see from the template that your total assets was 81,500 and your total liabilities was 17,000. So your net assets would be the difference between those two, 64,500. Now, they did not give us any other figures. So in order for the balance sheet to balance, the only thing that's missing is the owner's equity, which we can input as that 64,500. All right, and there you have it. There you have your completed balance sheet. It's fairly simple once you understand and correctly, appropriately fill in the items in the right place. Okay, so you need to know which is a current asset, which is a current liability, what is a fixed asset, what is a long-term liability, in order to properly and accurately complete the balance sheet. Okay, so I will send you a assignment for you to try. It's quite fun. and it's practicing using the balance sheet template. I look forward to seeing your responses posted on the classroom page, and feel free again to message me with any questions you have. I look forward to seeing you very shortly. I will see you for my next video, which is on the income statement. Okay, take care and bye-bye.